Hey everyone, stick with us versus herd. If it's your first time here, love the content, hit subscribe. If you want to get notifications from when we post videos, tap the bell. And if you want to subscribe to our options trading live channel, I go live Monday through Friday, 30 minutes before market open. Link is below in the description. And if you want to join the UVH fam, our community, link is below in the description to our Discord and our options trading group on Facebook. Now, if you made money today, comment below, got paid. If you lost money today, comment below, learned a lesson. And if you could do me a favor, hit the like button for the YouTube algo. I definitely appreciate it. Today was pretty choppy. Ultimately, everything closed a bit lower. I did have some good trades, I wouldn't say they were like fantastic trades, but the market was moving ultimately lower. But kind of give you an idea what I did in terms of day trades today. I'm up $204. Not enormous, but based on what the market gave me, I had 3 green trades in a row, and then I put a snap trade on. But before I get into my actual trades, kind of want to go into what I think could potentially make the stock market drop. And, first off, today, like on the Qs, on SPY, we had some downward pressure here, especially like end of day. SPY dropped from 326 all the way down to 324. And then, the Qs also, they just never recovered. They try to go green here in the afternoon and then just push further red into close on the Qs. Now, I was saying this morning during this morning's live stream was, tech is basically holding the market up. And if we start to see a rotation to the market, we're going to potentially see some problems. At some point today, Dow was up 250, ended up closing a little bit lower than that. I think it was only up 100 points at the end of the day. And we're starting to see some rotation, like tech stocks, like Apple, closed $5 lower today. Microsoft closed, $3 lower. NVIDIA closed $7 lower. Netflix closed $12 lower. Tesla closed a whopping $74 lower. Now, tech is taking a beating. Google's down, Amazon's down, Facebook is down, and all the leaders in tech were just getting smacked. However, there was a significant rotation. Like if you look at Apple's chart right now, Apple, even though it had some pullback, in terms of the 1-year chart, doesn't really make a whole lot of difference. It's fine. Like, okay, well, yeah, we had a red day, pulled back $5. Who cares, right? What I was saying this morning is what I'm looking for is a rotation in the market. Look at some of the financials. Financials were up. JP Morgan was up, 2%, $2 today. So some of these stocks that are looking a little bit undervalued, I'm looking for a rotation in the market where money flows out of tech and into some of these underperforming stocks like JPM. Bank of America also was up 3.5% today. Goldman Sachs, it was up a lot more, but they came down. Goldman Sachs, pushed up to 214, came down to 212. So I'm looking for the financials, some of these other stocks that are lagging behind. Now, IBM, kind of get into IBM. I had a trade on IBM today or overnight. I had an earnings trade. IBM, we made $64. Could have made a lot more money, but I didn't hang on to the trade. Now, looking at IBM here, what did I do? I had an iron condor. I sold at the money iron condor. I shorted the 127 call and put. I bought the 134 call. I bought the 120 put. For a 472 credit, I shorted 2 of them, and I bought them back for 440. So we made $64 in terms of IBM. Now, IBM, what I was looking for at IBM is this thing skyrocketed straight up to 135. Bulls are like, I win. The expected move is only like $3 and some change. It moved like $6 to $9 at some point. It was looking like it was going to open up at 132 and push up higher. But all it did was drop. So that's what I mean. I could have made a lot more money. If it came back down to like the 127 area, would have crushed premium. It did crush premium. Could have made a lot more money, but I didn't want to take the risk of IBM, hitting 132 and ramping up to like 135 area, which would then, this position would then be a losing position. So you got to manage risk. Like I only made $64. However, I managed the risk the best that I could. However, I thought that it was going to go lower, and this is kind of the things that I'm looking for in terms of the tech earnings right now, and we have a lot of them coming up. Microsoft, Tesla, IBM was one of the first. Now, IBM, their adjusted earnings fell 31%, but that beat analyst expectations. Analyst expectations were expecting a lot worse, which is why the stock went up. However, it didn't save it. Kind of what I'm looking at here is the company's net income was down 46% from a year ago. I mean, come on. So when we're starting to see numbers like this, also this was the company revenue declined year over year for the second quarter in a row. So the question is, to me, earnings not good. It's not getting better. Companies are still down. I mean, if this happened in 2019 and people were, if this was a report, the stock was seriously cratered. But since we're in 2020, those rules do not apply, and the stock went up. However, the stock did close red. 31, it gave up all its gains and then some, closed down 0.25%. Not huge, but for it to skyrocket like that and give up all its gains, I mean, that's pretty enormous and pretty telling on what's going to happen to the tech stocks. Now, same with Netflix. Netflix reported earnings last week. They said they were, guidance wasn't, they cut guidance in half. I mean, things are not good for Netflix, and it came all the way down to 449, bounced back up to 500, and has basically been chilling at 500. We've been trading in a range from 45 to 505 and basically pinging back and forth and really going nowhere, which, I mean, I think that Netflix could go a little bit lower, but at the end of the day, who knows? We're below the 10-day moving average, possibly come back down here to the 450 area, which it did test the other day when we had earnings that came down to 449.65, which is basically 450, bounced back up to the 500 area. So we'll see what happens. So far, I honestly have not been impressed with the tech earnings. I think they've been running way too hot, and I'm not saying short at the top. I'm still playing both sides, shorting, going long. I mean, whatever. Right now, you can't just pick a side and keep layering in. Right now, you have to go with the price action. Even though these earnings aren't great, stocks are still going up, right? Kind of going over, some of my other trades today. I did get into DOCU. I was buying and selling the 200 call earlier today, this morning. And I bought it for 510, sold it for 580. I had this week 200 calls. Now, to kind of get into that, I locked in a $70 profit, made it roughly 15% or so on that. Since it cost me $5, sold it for 70, or sold it for $70 profit. So 510, sold it for 580. So I made $70. But DocuSign, kind of what I was playing here. I wasn't looking at, look how high it went. I was just playing the range all day today. I was just looking at what the range was, what it was establishing, and looking at this call here. Good thing I sold, because it definitely went, that call went lower. Yesterday, DocuSign basically bounced at the same area, the 198, 199. I played the same exact scenario here today. So at 8:53 this morning, which is right in here when it was bouncing out, starting to break out, I played it from the 850, this candle right here, when it was just crossing back over 200, and I played it up to the 202 area. I sold it probably a little earlier, so I sold at 917, which is right on this candle as well. Pushed up a little bit higher, but we didn't get that whole move. But as you can see, I sold it at 580. That after the high of the day, after it opened, that's the 200 call only came as high as 623. So I only left $50 on the table. I captured most of that move, and it only returned there later that day. But at the end of the day, I mean, it closed out. I would have been a loser if I would have held on to it. So, we flipped that, played that a little bit. I was also trading Square. Now Square, not as great. Now Square, just trading, basically what I was looking at was the delta moves here. Square, I made another small gainer here. I bought it. I made another $70 here. I bought the 127 call. Was just looking for a little scalp. Bought it for 350, sold for 385. I had two of them. Now, let me show you here. The 127 call, kind of the movement on here. Day trading, I've just been picking my entries very carefully, and just trying to take a little bit especially when, you know, we had some very bearish momentum today. However, Square was holding up relatively well. It dropped hard at open. I mean, this contract hit a high of 575, closed at 278. I bought these contracts at 350, which was at 11:45 this morning. So I bought it right in here, you know, when it was pretty much Square was stabilizing. So on the second breakout, I missed the first breakout because I was trading DocuSign. The second breakout right in here, when it came back up to 129, is when I sold. I sold a little bit. I mean, these came up to 430. I sold a little bit too early. I sold at 385, but I was a little bit scared that in this area it was just going to drop and fall apart, which it did. So I didn't hit it exactly, but I got the meat of the move from down in, you know, the 127 area up to 128.80 area, and we captured, you know, $70, which is roughly 10% of that trade. So actually exactly 10%, exactly 10% of that trade. Next trade I did is I got into Snap. So Snap, I'm currently in this trade right now. I got 258 credit, and I'll show you what it looks like here on Tastyworks here. So I shorted the at the money 25 call and put, and I bought $4 wide wings here. And really what I was looking at was for Snap to, let's bring down implied volatility down a little bit. Bring it down to like 100%. What I'm looking for it to do here, stay between roughly 22 and 28. And the reason why I did that is I felt Snap right now is at 23. You know, 28 above 27 is resistance here. 22, there's solid support. So I felt like playing that range was relatively safe. I sold two of them, so I got, you know, $5 in credit for that, essentially a little bit over $5 in credit, you know, kind of chilling here. Now Snap, they just reported earnings a little bit ago. Their net loss balloons from a year ago. Revenue's up 17%. Stock price fell 8%, but we had a lot of cushion. Implied volatility was 183% for this week's expiration. So I felt this trade was relatively safe to get into to sell some premium, even though they are moving quite a bit after hours here. But we have quite the cushion in terms of premium, and, you know, the lows and the highs being at support and resistance. Now Snap reported its daily active users at 238 million, up 4%. Net loss grew to 326, up from 255 million a year ago. So, you know, kind of mixed messages are going on right now with Snap, and that's why it's real. I mean, it's down, but it's not like cratering down, way down. We'll see what happens right now with the conference call. They're currently in the conference call. I don't know what's going to open up tomorrow, but right now, my range right here is a low of 22 and a high of 28, and I feel like it's right now trading within the range. So if it stays around this area tomorrow, we're going to be making like $100. So nothing huge, but relatively safe trade, and just repeating the process essentially. So that's kind of what my thoughts are. What could tank the market? What's kind of holding it up right now? Kind of where we're going. If you watch this video to the end, comment, watch to the end. As always, stay safe, stay green. It's us versus herd.